Hi and welcome to London's end of day report for Friday, August the 26th. European markets pretty much were selling off right throughout the London session, not in a big way, but there was ongoing increased scepticism that Ben Bernanke, the Fed chairman, would deliver something market friendly in his speech at Jackson Hole later on in the afternoon. We'll get to that in a minute. Before we do, we had US economic growth figures revised for the second quarter. The 1.3% annualised growth rate was revised down to 1%, with consumer spending actually revised a bit higher and business investment a little bit higher too, but more than offset by bigger drags on the growth bottom line from inventories and imports. So 0.4% annualised in the first quarter, 1% annualised in the second quarter. That's pretty weak for the US economy, and given that there's a tendency at the moment for the statistician to overestimate growth and then a year later subsequently revise it lower once he receives more accurate information, there is really a serious risk that the US economy is not growing at all at the moment, on the cusp of recession, if you like. It's just that we don't know about it, we haven't been told about it yet. So that was the background that Ben Bernanke started speaking in, and he really didn't give markets what they wanted. I'll read just a couple of quotes. Bernanke said that we've discussed the relative merits and costs of the special tools that we can use to stimulate the economy if we judge it necessary in the future, but his view was reiterated that the moderate recovery, though patchy, would continue and it would strengthen over time. Now, our view at Westpac is that that won't happen, and that the numbers are going to remain weak on the US economy over the remainder of this year, and they will in fact embark on a round of further quantitative easing in early 2012, sorry. But for the time being, certainly that's not Ben Bernanke's view, and he definitely hasn't got a consensus around the FOMC table anyway. They're going to have a two-day meeting in September to discuss these special tools in greater detail. The September 20 meeting was scheduled to be just a one-day meeting, but apart from that, nothing really new. He then went on to talk about the long-term prospects for the economy, which he assessed as being pretty good. He didn't think that the problems of the last 4 or 5 years would materially impact on the longer-term growth potential of the US. So initially, markets sold off very sharply. The Dow was down 225 points at one stage, but fairly quickly we saw a turnaround in sentiment come through. And as I speak, markets are actually up quite sharply. The Dow's up 1.14% at the moment, just after 5 o'clock London time, and European markets heading into their close. Well, the FTSE's now unchanged on the session, and the French market's down 1%, German market down 0.8%. At one stage, those markets were down closer to 3%. So there has been a decent recovery in sentiment. It possibly related to the fact that Bernanke says the long-term prospects for the US economy still remain reasonably robust, even if it might take a while to work through the short-term issues. That might be the reason, I don't know. But all I'm telling you is that markets are rallying despite not getting really what they wanted to get from Bernanke in terms of some sort of commitment to QE. But as I say, we'll probably get that at some future point. Commodity markets, not too much to write home about. Crude oil down 0.1%, copper up 0.1% at the moment. Gold's up 1.2% at $1,784 an ounce. It seems to have ended its run lower that started earlier in the week. And the Aussie dollar's at 1.056. It's benefiting from the stronger equity market sentiment that's coming through at the moment. Look, it's a UK bank holiday on Monday, so there won't be a report for me covering European markets, US markets on Monday, so I'll see you a little bit later next week. It's time now to have a drink. Not a drinking man myself, but I'm just going down to the wine cellar to pick up a bottle of wine.